because so many people out there selling insurance don't ever take the time to really understand the mechanics of what it is. It's
that 75% or more of premium audits are incorrect. And that's a big number, but
And I mean, I feel like if I'm an agent and I'm not looking after my client's best interest because I know these things and I know what to look for, holy cow, is my book in jeopardy?
Let's be real. Like most of these people aren't going to remember those discussions you had when you're bringing them on as a client. You're talking about the audit, unless it's like something that's coming up, really quick.
The reality of the matter is, I've always advised my producers, show up. Just show up and be there. Just being in the room many times is enough for you to make your client feel more comfortable than they have in the past.
What NCCI has changed to is a state-specific split point.
You got to be able to think outside of, how do I get paid? How do I get a quote? How can I close this business? You have to be an advocate for your client to do that. And what I understand is that by them getting that account, they're going to have more payroll, which in turn means more premium, which in turn means I'm going to make more money.
There are some states that anecdotally have a higher percentage of permanent partial for relatively minor injuries, and that's going to increase claim costs.
My problem with that is a lot of these people aren't real auditors. And I already know it's coming. I'm not talking about you that have been an auditor for 20 years at a carrier. I'm talking about the people that go take a class on the weekend to become a premium auditor, and they don't even understand the difference between remuneration and payroll.
So one of the main things is the audit. Like, and if they, if they're coming back wrong all the time and you're not doing anything on the front end to help mitigate that, then that's a problem.
One piece of advice I would give every producer out there is get really well versed in what your state situation is before you even think about going outside your own borders, because you could get yourself into some serious trouble pretty quick.
Without being the agent is help them prepare for their audit and show them how you work with businesses and
at that time. And I think that agents miss the mark a lot of the times on not helping their client to prepare because they're not prepared. What's up, everybody? Welcome to the Power Producers Podcast, where we are refining and redefining the sales game. And today we have got another good one for you with my friend Kevin Ring from the Institute of Work Comp Professionals. They are a mainstay in Florida Risk. It is a requirement to work here for you to go through their program and get their designation. And I couldn't be happier with the results that we're seeing as a result of that. He's no stranger to Power Producers. We've had him on here enough. You're probably wondering when he's going to become a co-host, but there's been some changes here in 2024. And I think it's important that maybe we get into the impact that some of those have had through the first quarter and what Kevin's seeing, because I can tell you this, if I need to find some answer to something from somebody who's keeping their finger on the pulse of workers' comp across general industry nationwide, this is the guy I'm going to call first, before anybody else. So, Kevin, welcome back.
Well, thanks so much. It's great to be with you guys again.
Absolutely, man. And you're going to be with us in person again this year in Key West. I'm looking forward to that. That's always a good
I'll be there this go around.
Yeah, and Kyle's going to you'll get to meet Kyle. He'll be there this time too. So we're always thankful that you help us put that event on. And I know everybody loves having you there because you're such a wealth of knowledge. So let's kick it off. I mean, what are you seeing? What are you hearing in the marketplace based on all the stuff that we saw happen January 1?
Yeah. So, I mean, the first thing and the structural thing that's changed has to do with the experience mod. So I don't remember if it was late 22 or early 23, NCCI announced that they were changing some pretty substantial things with how their mod works. They didn't change the calculation. It wasn't, a wholesale change like we've seen in a few other states over the last several years. And we're seeing in Pennsylvania coming up at the beginning of April. But it was more a change in the method. So for those who are familiar with the NCCI experience mod, there's a split point, and that split point has always been the same no matter what state you were in. It's changed over time. Since 2013, it's been changing every year. Most recently, it was 18,500. Well, what NCCI has changed to is a state-specific split point. And this for agents, especially agents that have accounts operating in multiple states, it can create some confusion. It can create just some, maybe difficulty keeping track of things. But from NCCI's perspective, and while I am no actuary, I tend to agree with this, setting the split point for each state allowed them to adjust the experience rating plan to how the system in each state operates. So you have split points as low as, I think, $9,500 in Oregon, all the way up to on or just over $30,000 in a state like Louisiana, which historically has very high claim costs. And when you see that swing, and you understand that they were kind of asking the same questions and using the same method to come up with that number in each state, it's not hard to see, without knowing a whole lot about it, about why doing that is going to produce better results in each state. But as with any change in the experience mod, there are always winners and losers, although the Rating Bureau is always happy to say that any change like this is premium neutral.
Do you real quick, just like what you said about the Louisiana having notoriously higher claims costs, like what do you know the reason behind that? That just struck me as interesting.
Well, there's probably different reasons in different states, and I don't know a lot about Louisiana, but we can talk about a state that I know a little bit more about, kind of the inner workings of the system, which is Illinois, which is another state that has a much higher split point than the 18.5 that they had previously. Illinois has a reputation for a very large amount of attorney involvement, which always, studies have shown at a minimum getting an attorney involved in a claim more than doubles the cost. But there's a ton of variables. There's a question of, does the state have a medical fee schedule, or are providers kind of allowed to charge what they want, subject to negotiation with insurance companies? How involved are attorneys in claims? How are the settlements structured when attorneys are involved, which can change the scale of kind of the multiplier when attorneys are involved. So it's a lot more to do with structural things related to that state's workers' comp system than it is workers' comp itself.
Well, and the thing too is, with Illinois specifically, you've only got 3 days to get somebody back to work for recover at work. So, it's not like Florida. At least we have a fighting chance in a week. But it really limits the claims that are going to be medical only at that point, based off of how quickly you have to get them back.
Right. And that's certainly going to play a role. And it would be interesting to kind of look at the split points and see, from, the standpoint of which ones went up and which ones went down. Things like, the waiting period, the indemnity rates, NCCI, you have to dig for these, but NCCI has, state by state stats that you can sometimes find in terms of the percentage of indemnity claims that are permanent partial versus temporary total. So with the permanent partial, you're dealing with a settlement at the end of the claim for a permanent loss of function. And there are some states that anecdotally have a higher percentage of permanent partial for relatively minor injuries, and that's going to increase claim costs. And likewise, they also changed how they were calculating the per claim accident limitation. So this number that is effectively the maximum amount that any claim can impact the experience mod. And in every state, that number went down. In some cases, more than 50%, some not nearly that much. But they changed their methodology, and I'm forgetting exactly what they did, but it's not really important. But the net result of that change is that for employers that have had what are often referred to as shock losses, things that are $400,000, $500,000, $600,000, the impact of those injuries is going down across the board.
So why do you think that is?
Well, the reason that they changed their methodology is that they felt like I wish I'd looked into this before we started recording, but they essentially started using a different scale, looking at the range of claim values in a state in a different way, and they kind of picked a different mile marker to base that maximum on. If I had to guess, I think, looking at what some other states have done with their experience rating calculation outside of NCCI, I think it's an effort to, let me say it a different way. Dollars are counted on the mod based on how good a predictor of the future the rating bureau feels like they are. And that's why, the dollars under the split point count 100% on the mod. Everything over that is discounted by the weighting value. And I think they came to the conclusion through their actuarial work that they were considering too much in the excess loss as credible. And so they cut that down.
My question would be, how can producers, agents, whatever, use these changes to their advantage?
Anytime there is change, there is opportunity. Big change, small change, massive structural change. And the opportunity is in talking to clients and prospective clients about your experience mod is changing, or for a lot of folks now has changed, and here's what you're going to look for. You could get into your mod analysis software if they haven't had their new mod for 2024 yet, and talk to them about how this is probably going to change. But at the end of the day, what we know about managing the experience mod and controlling an employer's workers' comp costs hasn't changed. But what we've found over a couple of decades now is that when a producer can share these kinds of details with employers, they by default stand out because no one else that this employer is talking to is discussing these things with them.
Yeah, Kyle took a call right in the middle of the follow-up of that, so we're good. No, but I mean, I think to me, anything that revolves around comp is something that if you're a producer and you can learn about it is going to be used to your advantage, because so many people out there selling insurance don't ever take the time to really understand the mechanics of what it is. It's like, let me get some applications, get some quotes, and call it a day. With workers' comp specifically, it's state legislated, right? We know what the rules are in our state. Now, if you want it, like I found out one that really just blew my mind a couple of weeks ago, and I didn't think that the producer was right, and I ended up having to do some research. I couldn't believe that the state of Nevada caps the payrolls regardless of class code for anybody on workers' comp at like $36,000 or something like that. So you could be a framer, that's making 90 grand a year, but you're only going to pay comp on the first, whatever that amount is, $36,000. And so I think it's really important, number one, that if you're going to be somebody who goes out to lead with workers' comp, you better know your stuff. You better know the laws in your state and how all of this stuff is going to work in concert with each other. But the other thing is, remember, it's state specific. You can't just take what you know because I know Florida and think that I know Nevada the same way, because obviously I didn't. And I think that, that's probably one piece of advice I would give every producer out there is get really well versed in what your state situation is before you even think about going outside your own borders, because you could get yourself into some serious trouble pretty quick. Just like the Illinois thing. Down here, we have 7 days to get somebody back. I'm going to go write an account in Illinois and build a return to work, recover at work program around what I know about Florida. But then I find out that they've only got 3 days to get somebody back. What kind of advice did I really give to that new client?
It's a huge, I'll just say issue for agents, because more than probably ever before, businesses are operating more broadly. You have people in more places than you probably did in the past, and more skilled agents are casting a broader net geographically, which is just so much easier to do now than it was 20 or 30 years ago.
Well, I also think COVID had something to do with that. I think that when we weren't able to go out and cold call, reaching out across the state borders or whatever, because you could do it on the internet, people who might not have done that in the past were like, well, it's a way for me to try and get more revenue in the door because I can't go prospect the way I normally do.
Right. And then the danger for the producer is exactly what you just said, is that, you might be the smartest person in your state when it comes to workers' comp. But if you assume that everything works the same, it can be the rating period, every state has exceptions to the rules. You have states like, California and New York and Pennsylvania and Delaware and New Jersey that have entirely, different experience rating systems. In the case of Pennsylvania and Delaware, completely different classification systems. In California, there's a boatload of classifications where there's different codes based on how much money someone is making, even in the exact same job. And if you don't understand those things, then you can wind up embarrassing yourself and not holding on to that revenue for very long.
Yeah, I think obviously I just lobbed you a softball, but I'm going to connect the dots for the people who haven't. This is why you need to work with the Institute of Work Comp Professionals. I can't keep up with this stuff, man. I have a hard enough time keeping up with it just for Florida. And we're the place right now. I'm not gonna call names out or cast stones, but we're running into issues with our carriers, man. Some of our carriers are starting to shrink down their workforce a little bit, and they're making cuts, across the board, not just in marketing, but in claims and in audit. And we've experienced this directly, where claims aren't being handled the way they were a year or two ago. Literally, with one specific carrier, every single audit we have gotten so far this year has been wrong. We're 3 months into the year, and 100% of them have been wrong. And I feel like if I'm an agent and I'm not looking after my client's best interest because I know these things and I know what to look for, holy cow, is my book in jeopardy, right? Like, I feel
what's one of the things that we talk about all the time with people on the workers' comp and the pain points? It's one of the main things is the audit. Like, and if they, if they're coming back wrong all the time and you're not doing anything on the front end to help mitigate that, then that's a problem.
Yeah. And we've just got a rule now that from that exact carrier, anytime the audit comes back, we're just automatically disputing it because we know it's wrong. And we've not been wrong. We haven't been wrong yet when we've disputed it. There's always been money recovered for the client. Now, I would tell you that you probably need to make sure that if you're going to go out and be a whistleblower that the audit's wrong, that you're relatively certain it's going to result in a decrease in premium for your client, because you don't want to be that guy or that lady. But I just think there's so many things that are going on with the dynamics inside the companies right now that we should really be on high alert more than we have been the last several years, because I do feel like it's been relatively smooth sailing. The other thing I've seen an increase in is I've seen a lot more NCCI audits, where NCCI is actually going out to the client to audit to make sure that the class code that the agent has provided is the actual class code that should be used. That's not an accident, man. They don't just randomly go through and look. Somebody is sending them out there. And most of the time, it's going to be one of these auditors that's from the carriers. My problem with that is a lot of these people aren't real auditors. And I already know it's coming. I'm not talking about you that have been an auditor for 20 years at a carrier. I'm talking about the people that go take a class on the weekend to become a premium auditor, and they don't even understand the difference between remuneration and payroll. They just, and they're going to come in and now they're going to put your client's livelihood in their hands, and you stay completely removed from it because, quite frankly, you as the producer haven't invested in yourself enough to learn about this stuff. And it's just opening every one of your accounts to be at complete risk because somebody who knows is going to come in and they're going to have every ounce of ability to drive a wedge on your account over something you easily could have done proactively.
We have seen a dramatic increase over the last 18 months in the number of premium audit issues. And some of that, and it's something that we talk about in the Certified Work Comp Advisor, the idea that auditors are often not well trained in the rules. And listen, auditors have the same challenges knowing the rules that we just talked about with agents. If you're an auditor that's working, say, up in Jacksonville, you might be doing premium audits in Georgia. And guess what? There's different rules in Georgia. So it might be the best premium auditor in the history of the state of Florida. But if you don't know those differences, then it's an issue. And it's funny you mentioned NCCI classification inspections, because I just had an hour-long phone call with someone this morning about exactly that. But what we've seen a lot of, especially in 2024, is a little bit different. And I want to highlight, David, what you said about this idea of disputing audits, because I kind of think there's the good dispute and there's the bad dispute. And the bad dispute is what most agents out there are doing, which is client calls and says their audit is wrong. What that's really code for is, I just got a bill I wasn't expecting, therefore it must be wrong, right? They don't know that it's wrong. They don't know why it's wrong. But then the agent calls and says, I want to dispute the audit. And they probably exchange 24 emails before the agent calls the client back and says, you know what, we tried, but it turns out, this is all just fine, because the agent didn't really have a basis under which to dispute it. They maybe argued that something wasn't fair, but that was about as far as they could get. The good dispute is when you understand what you're disputing and you have a position that you can take. And a lot of that starts with what I know you guys do in your agency, which is making sure your clients are prepared for the premium audit, right? So they have all their records together, they have any supporting documentation that they need, and they probably have a pretty good idea of what the check or the bill they're going to get from the insurance company is going to look like. And if that comes back, in line with what they were expecting, then all good. If it doesn't, then you can get the auditor's worksheet and work your way backward until you find where that discrepancy is. But where we've seen a bunch of issues, and where unfortunately I've had to agree with a fair number of premium auditors, is where carriers are getting rid of what I would call special deals that they've made with employers over time. And this takes a number of different forms. You have businesses that are and have been in classifications less expensive than the one they should be in. And the carrier probably did that because the insured has been profitable. They've pulled all the levers they can pull in whatever state to decrease the premium. So they say, oh, well, let's just put you in a lower rated code so we can decrease your premium a little more. It's an exit barrier for the carrier and for the agent. You have situations, I talked a couple weeks ago now with an agent. It was a private school that had off-duty police officers doing traffic control. And for some reason, for years and years and years, the auditor has not included the payroll for these off-duty police officers who are clearly uninsured subcontractors. They're not independent contractors. Well, they got included this year. And why is that happening? I've talked to some people a lot smarter than me about these things, and what they suspect is that rates have gotten so low that what you're seeing is a little bit of a squeeze on profit margins. And of course, the rest of commercial insurance is just in the toilet. So where can they make some money? And I compare it to, if you have a friend that operates a restaurant, and they say, come in here anytime, we give you 50% off your dinner. And then, business slows down and they come to you and they say, listen, like we kind of gotta not do this anymore. You're going to have to pay, full freight when you come eat with us. It's not unreasonable. The difference is your friend is telling you what they're doing. And with the audit, they're just doing it. And in a lot of cases that we've seen, the agent either didn't know or didn't remember that they've been getting this special treatment, and the client and the agent were both completely unprepared for the dramatic difference in premium that getting rid of that special treatment was going to cause. And the bottom line is that you need to be looking at your book of business, making sure, as always, that they're classified correctly. And if they're classified on the low side, then warn them about that. It's a fantastic exit barrier, but only if you warn them. And also warning them that the carrier could decide that the deal is over at the next premium audit. And even if they can't change it at the audit, they can amend the renewal policy.
I'll tell you what, man, I think that there are two things that if I were going to advise any newer producer, and I don't care, probably some older ones too, to do with regard to audit. Number one of the things that I learned early in my career, it is a heck of a lot easier to deal with audit during onboarding than it is when audit actually happens. So if I have an account and I'm even remotely not sure if something's classed correctly, I want to bring the auditor from the carrier out to that new business onboarding meeting. I'm going to show up with an army. I'm going to have somebody from claims, somebody from audit, somebody from loss control, and the underwriter. If you walk in with those people from an insurance carrier to your prospect who's going to become your client, you have already differentiated yourself from all of your competition because nobody else is going to do that. But it gets rid of all of the stuff on the front end that could cause you headache and heartache and ultimately cost you that account on the back end. The other thing I'm going to do is something that I know for a fact the Workers Institute of Work Comp Professionals is a huge advocate of, and Kevin actually referenced this, and that is you got to prepare your clients for the audit. One of the things I love about their program is they're going to tell you what you need to do. They're going to explain to you why it's important, and then they're going to give you the resources that let you know that, hey, this is all you have to do. Here's the audit prep kit, which, by the way, is probably my favorite resource you guys have in there. I mean, it is a very well put together audit prep guide for your client. And if you were just to do that alone, it's worth the membership of joining them because it's not something you're likely doing now. And to be honest with you, I don't want to hurt anybody's feelings, but you're probably not qualified to put it together if you don't know how workers' comp works to the letter of the law in your state. So audit can be a huge wedge, but it also can be a huge retention tool if you do it right on the front end.
Good point.
Well, there's no question. And, we say all the time that 75% or more of premium audits are incorrect. And that's a big number, but we feel incredibly confident about that number for a wide variety of reasons. But it's also important to know that the bulk of that 75% are not mistakes the auditor is making. Now, auditors are not perfect, as you noted, earlier, and they probably kind of go in waves. But the biggest reason there are mistakes in the premium audit is that employers don't understand how to keep their records. And I mean, let's use something as simple as expense reimbursements. If you have employees that are spending their money and then turning in receipts to get reimbursed, well, if you don't have the amount of those reimbursements broken out in your records, to the auditor, it's going to look like payroll. And guess what? You're going to pay workers' comp for that hotel room they put on their personal credit card, which is not something that you want to do. And without those records, the auditor has no choice but to do the audit in the way that looks correct to them. And the rules are built in a way that when there's a mistake, it's going to default to the insurance company getting more money than they should rather than the other way around. And I understand why it's built that way, and it's not the auditor's fault, but it is the responsibility of the agent and by extension the employer to make sure that their audit is set up correctly. And one of the things that we say pretty frequently, and it's a good question to ask, a business owner when you're working with them and maybe you want to write their insurance, is, have they ever had an IRS audit? And, a fair number of them probably will. You're dealing with higher net worth individuals. Well, did they retain any sort of expert help to help them prepare for that audit? And there's a near 100% chance the answer is going to be yes.
Mm-hmm.
Well, they have a premium audit every year where substantial amounts of money are on the line. And how many of them are just floating around, completely without assistance outside of potentially getting the agent involved in a dispute when you don't like the result? And, how much money have they lost? How much could they have grown their business with that money if they just had that help to make sure that, not that they're paying less than they should, right? This is not like
just
the
that it's
Wesley
correct.
Snipes, that it's correct, that you're paying exactly what you should.
So obviously, I mean, the best time to go over this kind of stuff is going to be on the front end. But let's be real, like most of these people aren't going to remember those discussions you had when you're bringing them on as a client. You're talking about the audit, unless it's like something that's coming up, really quickly. When's the best time to go and revisit this stuff? Because you don't want to be reactionary, right? You don't want the audit to come and then go through this. Is it a month before? Is it 60 days out? Like, in your experience, what's a good time to kind of revisit this worksheet, kind of kit that you guys have for the audit?
Yeah, so it does start on the front end. And what I would probably tell agents to do, and you don't need to have a conversation about the entire premium audit, but it's really about the excluded remuneration, right? The item, the money and the substitutes for money a business may give its employees that you don't have to pay workers' comp on. And there's a checklist, and you go through, like, because no business has all of them. And I think the default national list is 16 items, but then there are some other state specific things that folks need to know about in their state. Because if they have any of those items, they want to know up front, because they may need to adjust their systems to make sure that they are keeping track of those in a way that they're going to be able to give to the auditor, right? So at that point, it's not about them remembering them during the year. It's more about, hey, we're not, maybe tracking this or that the way that we should be. We need to adjust our systems, because refiguring that down the line could potentially be difficult or impossible. So that's the first step. Then, our process has the agent getting started working with the client on the premium audit as soon as possible after the renewal. And of course, depending on the time of year, both, on the calendar year, but also, for the client, if they renew on 7/1 and that's their fiscal year, you're probably not getting the accounting people's attention for the first week or two while they just close out the year for the business. But the sooner you can get in there, because the audit's coming, right? It's going to come 4 to 8 weeks probably after renewal, and you don't want to have to rush it. You want to make sure that you have time to get things together. So the sooner you can be addressing it after renewal, the better. And
yeah, I mean,
another important.
That's one of the reasons why. Yeah, that's one of the reasons why we want to prospect about a month after renewal, because we know most agents aren't going to give their client support at that time. And I think that agents miss the mark a lot of the times on not helping their client to prepare, because they're not prepared. They're not educated on what they need to know. And as a result, they get a little bit defensive. They're afraid somebody's going to ask them a question they don't know the answer to, or whatever else. The reality of the matter is, I've always advised my producers, show up, just show up and be there. Just being in the room many times is enough for you to make your client feel more comfortable than they have in the past. But the other thing I would challenge you by asking is, how are you ever going to learn if you don't put yourself in a position to learn? And I can tell you, I've learned a lot of stuff sitting in audits, just talking with auditors. Now, I'll be honest, probably had some ulterior motives to try and make sure that I was friendly with them and got them onto my side, thinking that somehow maybe they would make it a little smoother. Then I learned the trick about booking the audit at 4:30 on a Friday afternoon to make sure that it was done very quickly. But, you know, we laugh about that stuff tongue in cheek, but it's an outward thing that's visible to your client that you're there. And an audit, regardless of what it is, it could be OSHA, it could be the IRS, it could be insurance related from workers' comp. Your client doesn't like that. And that's one of the things I feel is our responsibility, is to be the first line of defense for them. So if you're not sitting in on audits, let alone helping people prepare before that audit happens, but if you are a producer and you know this stuff, I got to believe you're prospecting right around audit time, because that's the best time. That's when, if it's not before the audit happens, it's as soon as that invoice comes in, that person you're prospecting is going to be a lot more susceptible to speak with you because they got something in the mail they didn't want to get.
Well, and prospecting pre-audit is really powerful for all the reasons you said. And there's another piece to it, which is that as agents, you're frequently talking to your prospective clients about all the stuff that you can do. And the reality is, you know, until you take over the account, there's not a whole lot that you can do. But what you can do without being the agent is help them prepare for their audit and show them how you work with businesses and the depth of that process. And the other thing you said I wanted to talk about is, and you were talking about the producer being afraid because they don't know the answers. And it's something that so many people, not talking about just agents, just people in general, struggle with, is that they don't know. And exactly like you said, you know, it's one of the most powerful ways to learn is to be asked a question that you don't know the answer to and go find it. And no agent, whether it's the premium audit or anything else, should ever be afraid to say, that's a great question. Give me 24 hours to research the answer and I'll get back to you. And another important point comes with your client and the premium audit and the importance of that individual that's meeting with the premium auditor, whether it's, you know, in person or over Zoom or whatever it is. They need to be knowledgeable about the business, but most importantly, they need to know what they don't know. We saw something in the last few months where it was a construction firm, and the auditor asked the audit contact person, do you guys do X thing? And I don't remember what it was. The audit contact person said, well, yeah, I think so. Well, guess what that auditor did? You know, X thing was a dramatically more expensive class code than where the bulk of their payroll was. All the payroll goes in the higher rated code. That may or may not have been correct if the business had actually done that thing, but they didn't. They didn't do that thing at all. And instead of hitting the pause button and saying, you know what, I'm not sure, let me go ask someone, you know, it then took the business owner and the agent weeks, you know, probably of the carrier thinking they were lying because they got this big bill they weren't expecting, to show that they really didn't do that thing that generated the higher premium.
Well, and I don't think social media helps with any of that, because a lot of the times auditors or underwriters are going to go look at your profile or your company page to have a predetermined idea of what you do ahead of time. And I'm not saying it happens every time, because there's a lot of shady contractors out there, but there's also people who like to embellish what they do in hopes they can get hired to do it, even though they're not doing it right now. And I don't think they ever realize what a disservice they're doing to themselves.
And that creates issues far outside of workers' comp. I remember, this is years ago, but an agent had an insured that manufactured some material that, you know, 6 steps down the line was part of a component on the space shuttle. And like, they had the space shuttle on the website, And they had a heck of a time getting all sorts of different kinds of insurance because they were like, oh, we don't want anything to do with things going into space.
Yeah. And I mean, we see it a lot where, like with landscape companies that don't do tree work, but there will be a stock, even sometimes it's a stock image. Like some of this, I have to question the underwriter. I'm like, come on, man. Like really,
Yeah.
like, this isn't even a branded truck that's in the picture. This is, I can go to Shutterstock right now and find this, but
I
you know,
get both sides of it.
I do. And it's you have to play the middle on that one. But I mean, we also need to give our client the best advice, and that is,
Yeah.
one of the things I tell every one of my clients is this: I want you to be proud of your company, but not too proud. You know, I don't when you're estimating your sales, I want you to be realistic. I don't want you to give me like your record year number thinking you might hit it maybe. Tell me what you know for a fact you're going to hit. If you're tracking higher than that, we can adjust midterm. Same reason we put everybody on pay as you go, or, you know, integrate it with a payroll company on the workers' comp. As long as you know what I mean, agents, I may blow some people's mind. I don't think I will, but just in case, I want to make sure we understand something here. I want to make sure we understand that because workers' comp rates are based off of a per 100, that is actually the same as a percentage. So if your rate is $2 per 100, that's 2%. If you have construction clients out there and they know that the cost of workers' comp is going to be 2% of what they're going to spend on the job, guess what? They can do all of their bidding around that, and it doesn't matter how much they spend because it's always going to be that percentage that's built into the bid, so they know they're hitting their profitability. And when that money's taken out from the payroll company, they're not going to feel it. But if you don't advise them in how to use those workers' comp rates to project their actual costs associated with the job, same thing with general liability, same thing with cost of materials and labor, all of that stuff, if you run a business, is a percentage of your overall revenue. It's not a difficult thing to figure out, but we're not giving that advice because I don't think a lot of agents even realize how the math works.
And it's an important point with construction. I mean, what you said is really important, but also, you know, when contractors are thinking about, you know, the many reasons why they should be working to control their workers' comp costs, you know, especially in a state like Florida, everybody knows what everybody else is paying rate-wise. And so if you can control your experience mod, well, guess what? Your buddy down the road that has a 50-point higher mod than you, their cost of labor is higher, and they're either going to have to bid more or be less profitable.
If they're even able to get the job. I mean, that's the other thing, which always cracks me up because it's sitting here and it clearly says on the mod worksheet, like something along the lines of not to be used for job bidding or awarding jobs or whatever. Yet that's what everybody does. I ran into a situation a couple years ago. I may even have told this story on a podcast we recorded with you, Kevin, but it was an account that was a construction account. It was a heavy contracting account, but they had a massive workers' comp claim. It was 100% a shock loss, but it did affect their mod. And the whole thing happened because they had a cleaning person that was on staff or a clerical person on staff that was just going around, you know, dusting, cleaning the office. They were told not to go upstairs. Upstairs was blocked off, roped off. There were signs, went past all of that for whatever reason, fell through the ceiling, got hurt. And it had enough of an impact on the mod that the contractor wasn't getting any work. I actually I was absolutely able to make a successful argument based around the DART rate for the construction codes that, hey, you're looking at the wrong thing. You're looking at the mod, and this claim never even would have happened on any construction site. If you focus on the class codes and the claims history over here, this is a pristine contractor for you to use. You shouldn't be prejudiced against them based on what their experience mod is, because they had somebody with a questionable workers' comp claim and a clerical code that doesn't even affect you. And we actually were successful in getting them back to qualify for the job as a result. But there's, again, you got to be able to think outside of, how do I get paid? How do I get a quote? How can I close this business? You have to be an advocate for your client to do that. And what I understand is that by them getting that account, they're going to have more payroll, which in turn means more premium, which in turn means I'm going to make more money and for doing my job the right way.
Yeah, the way the experience mod is used for qualifying subs is something that we could do another 2-hour podcast episode on, but I would say a couple things about it. First of all, you know, I've got a position statement from the Indiana Bureau from like 2011. NCCI put something out in 2018. NCCI has changed their copyright notice over the last several years in the way that you said about the experience mod is not and has never been designed to be a proxy for safety performance. And I don't have any beef with a contractor that wants to hire safe subcontractors, because if someone dies on that job site, well, guess whose big sign is going to be on the TV news, right?
Mm-hmm.
It's not the sub, right? So I get it. But there are far better ways. And what we've seen as a result of this improper use of the experience mod is you see so many stories, or I see so many stories from working with agents of employers that are sidestepping their workers' compensation in very, very problematic ways because they are terrified of things landing on their mod. And so it either has or eventually will lead to someone not getting the benefits that they deserve because of the way their employer has handled things. It is definitely causing people to manipulate their experience mod. And the thing with the OSHA statistics, which I'm a huge fan of, I wrote something recently advocating for that, is that they are explicitly designed to be a metric of safety performance, and they are designed to be directly comparable from one employer to another. You can see on the Department of Labor's website what the averages are for a wide variety of those OSHA statistics based on the industry. So if your DART rate is 2, is that good or bad? I don't know. Let's go look at how you compare to the industry numbers. And
well, and I like
there's
the fact you can do it by state and by national too, because it shows a reasonable benchmark.
And there's a lot, employers have a lot more disincentive to fudge their OSHA recording because there's more tangible downside to them getting caught manipulating their OSHA reporting than there is manipulating their comp and therefore their mod.
Yeah, and I mean, I think about things like, what happens if you have a couple of people, you're a reasonable sized company, decent, number of vehicles in your fleet. You live in a metropolitan area like Tampa, and a couple of your people end up getting rear-ended by somebody else in traffic. And now there's a claim on your workers' comp, hoping maybe you can get 10 cents on the dollar if it subrogates. But workers' comp's primary in Florida other than PIP, right? So, wait a minute. No, workers' comp's primary period, I believe, actually.
Yep.
I
Probably got
misspoke.
rear-ended by some New Yorker.
I know you're proud. I know everybody's shocked that I actually made a mistake verbally as we were recording the podcast, but workers' comp,
Sorry, we can edit it.
It is primary in Florida. What does that have to do with whether or not I'm operating safely on a construction site? If I'm sitting at a red light at a busy intersection and some jackass is texting or talking on the phone and plows into the back of me, I don't have anywhere I can go to get out of it. I just got to brace and try and take it.
No, it's a good point for sure. That happens, especially around here. That's why the auto rates are so insane.
Right, but it goes back to what I talk about, right? Read what the loss runs tell you and then become an advocate for your client based on that.
Oh, it happens. It happens frequently. I mean, several years ago, we saw a multi-million-dollar school bus contractor that hadn't had a workers' compensation claim in over a decade. Then they had 2 not at fault accidents with their school buses in a year. and they go away because the people hiring them wouldn't take them with a mod over one. And it sounds dramatic to say that people go out of business, but a lot of contractors have, especially when you start to get into the larger subs that are dealing with larger general contractors that are more likely to have these kind of processes, and also be less likely to be terribly accepting of the approach that you talked about, David, where you're trying to explain it to them. There are these computerized qualification systems where in a lot of cases we've seen the GC throw up their hands and say, listen, 100 people submitted bids for this, tough cookies. We'll take one of the other ones. And it doesn't, workers' comp is designed to do what it does, which is provide a no-fault system to make sure that if someone gets injured in the course and scope of their employment, that they get taken care of. It is not designed to keep score to determine whether or not someone is safe. Are there businesses with high mods that are demonstrably unsafe? Absolutely. But guess what? There are unsafe businesses that have good mods too. They've just gotten lucky.
True.
That's not, it's not that's not what the mod is.
Not a direct correlation between the two is what you're saying.
Right. And there are better ways to measure it that are directly correlated to, how safe your business is. And accidents happen and stupidity happens, and those things are going to wind up in your OSHA stats too, probably, but it's less likely to put you in a problematic place than your mod.
Yeah, I agree, man. And I think we could probably continue to go on, like you said, for another couple of hours, but I want to make sure that we're respectful of your time. And we actually are, for the first time in a long time, we're stacked 1, 2, 3, 4 for recording. So before I let you go, Kevin, why don't you give everybody like an update? What are your upcoming events? I mean, you guys have hammered the daylights out of that live one in Chicago, I know. What do you have on the horizon that's coming up, and what's the easiest way for people to get plugged in with the Institute?
Yeah, so folks can send me an email, kevin@iwcpro.com. You can also go to schedule with iwcp.com to see my calendar and book a time for us to chat. The phone number is 828-274-0959. Folks can always take our course as an on-demand program, so just taking it at your own pace. But we do have live programs on Zoom, April 30th to May 2nd, July 30th to August 1st, and then another one in October, the 15th to 17th. We're going to do another in-person, because by the time this podcast comes out, the workshop next week in Chicago will be done and dusted. But we are going to have an in-person workshop September 23rd and 24th in our home base of Asheville, North Carolina. And for the live versions of the course, they're approved for continuing ed in most states, which is a nice side benefit to knock some of those hours out, along with getting all that workers' comp knowledge.
I would encourage anybody, regardless of the format that you prefer, to engage with these guys. They make all the difference, and they literally hand you what you need and teach you how to use it. I know I got a lot of people in Killing Commercial happy to know that Kevin's coming back to Key West this year. Last year was his first time down there with us, and a lot of people got to hear him for the first time, and to hear him is to know exactly what I'm saying is true. So looking forward to hanging with him down there again this year, and just learning as much as I can, because every time I talk to the guy, it's something else. So everybody out there, we'll catch you next week. Kevin, see you in a few weeks, my man. We'll talk soon.
Thank you so much.
Yep.
We'll see you there.
Bye-bye.